Welcome to Wall Street Confidential, the show we give you the inside scoop as to what's really happening in the markets. I'm Greg Greenberg, here with Jim Cramer. Markets are selling off a little bit, but financials seem to be running.
JP Morgan reported a quarter today where it revealed where the real money's going to be made over the next couple of years, and that's in repackaging LBO loans. The Sallie Mae deal could be gigantic. I want to talk about how pricing works for a second, having sold fixed income. When you are doing a proprietary deal, and a management or a private equity deal, you can charge a lot of VIG, so to speak, a lot of credit on bonds because you're the only ones. These, typically when you're selling bonds, you're selling like bonds for Exxon. Can't charge very much, maybe a 16th. Here you can charge a point or two. What we're going to see is
bond markets, it's not very transparent.
Right. You can charge whatever you want. So, Goldman, Bear, Lehman, they're all in these deals. And I think the fixed income, which may be, say, 20% of these firms' earnings, might go to 60 or 70%, which means that Goldman, which I thought was going to make $25, may make $35.
And what does that mean more for Lehman? Because people always talk about Lehman as the traditional strong bond house.
Earnings could be twice as much as what people think. Now, also, it turns out that subprime mortgage is just a huge home run for these guys because they're repackaging all these real bad loans and people are buying them as equity. They're putting 4 and 5 points on it.
It also seems with JP Morgan, you're hearing them more and more as advisors in these deals.
Right. The advisors,
people looking for deals, you've heard about JP Morgan more than you have in the past.
JP Morgan, Jamie Dimon is finally a guy. It took a long time to get it in order. It used to be the premier advisor, and then it fell on hard times because Harrison didn't do a good job. The Harrison influence is now gone. The Dimon influence is good. Plus, they also have this great asset base, this great interest generating business. If the Fed were ever to cut, and one day the Fed will cut. If the Fed will ever to cut, these guys, the margin expansion is going to be extraordinary.
Okay, as a former Goldman guy, we're going to see a lot of job hopping soon? People going to be, you leave your star banker to the new private equity firm like we saw during the dot-com days?
No, there's no real reason to do that. Everyone's pretty satisfied. The money's really good everywhere.
Pie is big.
Yeah, so I just want to emphasize that the earnings, and the reason why I want to talk about this is the earnings estimates are way too low for these companies, and the street won't catch on until after they report.
And it's odd because they are the street. Jim Cramer, Greg Greenberg, and we're the Street.com TV. Please come back.